All right. Yeah, so today I'm just going to present a calculator that just shows how the money grows over time, basically. Right now, the way we're doing it is basically simple interest, paid out yearly, biannually, okay? And we're looking into compounding because some of the investors are asking, hey, my returns are due. Do I have to take it out? Can I leave it in? Can I compound? So we're looking into that. We'll see how it goes. But for right now, simple interest. Simple interest. And we say that our minimum, minimum input is 50,000. Interest rate, 20% per year. Time period, if we say 5 years, and we just calculate. And we see that, very simple math. In 5 years, your return will be worth 100,000. And you see the breakdown over the years. It's very simple. 10,000, 10,000, 10,000, 10,000.
Should make 10 a year.
10 a year. Simple interest, no compounding. So that means at the end of the first year, you're paid out your 10,000. If you want to take your capital, you can stop there, take your capital and go. But if you keep it in, the next year you'll get another 10, another 10, another 10. Total at the end of 5 years, 100,000. However, what we're looking into is compounding yearly. So we see that at the end of the 5 years, it's 100,000. Okay? But if we start to compound, same 50,000. We're saying 20%. Oops, what's going on? Compounded yearly here.
Could you compound it monthly?
You could compound monthly.
But you compounding. You think you're gonna go monthly, or
We think we're going to go yearly to start with. Because if you go monthly, the numbers start to go really fast when you start to compound, right? But it's a good thing. The numbers look good, but then that means that's putting more pressure on you as a trader to make sure you get those returns. So that's why we say we're looking at the numbers for yearly compounding, and it's reasonable, and you're still getting good returns, right? So if you calculate.
So why is it 50,000 now, Clement?
Skin in the game.
That the initial?
Yeah, initial.
But that's for your group, though. That's like your group of investors.
So the way we're promoting it is $50,000 to get it.
Okay.
Gets you a spot, right? And as I said, 50,000 compounding now instead of 5 years at 100,000, you're at 134,000, and you can see the breakdown per year. That means you're leaving the money that you made at the end of the first year, you're leaving it in, you're adding it to your total, and you're trading with that. So now you're getting 20% on the total amount from your initial investment plus your profit that you made at the end of the year. Okay? The second thing we're looking at is tiers, meaning that when you get to a certain amount, we're going to offer higher percentage. We don't know 100,000, maybe 150,000. We're not sure what the number is. We're looking at maybe having a second tier and a third tier. So that when you get to those tiers, you're automatically going to be moved into that tier. You're going to start getting a higher percentage.
Did you figure out what those percentages?
No, not yet. We're still discussing it internally. Again, at the end of the day, you could put some ridiculous numbers and the numbers will look crazy. But then again, it's on the traders to make sure that you get those type of returns. You might have to take bigger risk, which we don't want to do. Because what we're offering now, we know we can do it.
So the compounding, that's an option, right?
It's going to be an option.
It's an option.
It's going to be an option, yeah.
Because I think what we all would need to understand if we're in it as a group,
Yeah.
there might be some people that just want to take their return out.
Yeah, and some people are gonna want.
And some people are going to want to.
Okay.
Right.
So, you're talking about if you're in a group and some people want to take it out, you guys as a group, we got to make a decision to say, okay, if somebody wants to get out, either we pay him out and we continue, or we say, okay, we're done, everybody gets paid out and we exit.
Because you can, I guess, leave your principal,
Yeah.
take your, and just keep and ride with that.
Yeah, you could do that.
You know what I mean?
Like I said, option. It's not mandatory. You know, you could take everything out and leave, and you got your profit. Congratulations, enjoy it. You know.
The question that I had though was
Yes.
based on the last conversation that I had. My impression was that we were going to create our own separate trading.
Yeah.
That's what I think.
Where
Yeah.
like we're trading, like we come up with our own group of funds
Mm-hmm.
where you would trade it to get that return as opposed to being part of like whatever you have going on right now.
Okay, and it comes back to there was that question, that thought last week, and there was another thought. The second thought was, yeah. So if the market starts to go south and we get called, and I said, we manage to make sure that I'm not calling you guys say, hey, there's a call, we need to put in more money. That's if we're part of the group, because we're pooling the funds so that if the market turns, we have reserves to make sure that we can top up the account so we don't get called,
Yeah.
right? If we do it separately, that means on the side, if we want to do that, we got to make sure that we have enough reserves there to cover if the market goes south.
Yeah.
It wouldn't be part of the pool that we're trying to create, because the security in what we're doing right now is with the group. So that because it's a group funds, then that's where the security is. Because we're not trading with all the funds and we have the reserves there. If it's south, no problem. We can put more money into the account to make sure that we don't get called and our contracts
Can't
don't
we
get
do
closed.
the same ratios regardless of the size of the pool? Like basically, like I'm looking at it like for instance, like if I'm designing a building, right?
Yes.
I can design the whole building with the
Yes.
whole 1-to-1 ratio. I can
Yes.
design it with like a 1-to-20 ratio.
Yes.
And apply the same sort of treatment, like forces and stuff like that on it.
Sure.
And we do the same.
If we do, so the way we're trading now, if we put in 50,000
Yeah.
by itself, we're saying you need 150,000 in reserve
Okay.
on top of that.
So you're trading only 25% of the overall.
Exactly. So you need to have 150 in reserve just in case it goes south.
Goes south. Okay.
Good. You can also, with the 50,000, trade smaller lot sizes, smaller, so that you're making smaller returns. So you might not get to 20%, maybe you get to 10%, but you're still getting 10%.
Okay.
So the way we're able to get 20% is by having a lot of trades and knowing that we have the
The reserve.
reserve.
Okay.
So if you don't have the reserve and you're doing 50, then we have to, I say, listen, if we want to trade the same way, make the same 20%, as a collective, you got to say, hey, we need to make sure we have 150,000 in the back, just in case.
Okay, so give us the numbers on what that looks like. Let's say there's 10 of us, right?
Yeah,
And we know we need this 150 in reserve,
yeah.
right? And then we need what, the principal of 50,
50. So you're looking at 200. Yeah,
right?
correct.
200 grand, right?
Correct.
Okay, so that would break down to 20 a piece.
Yeah, depending on how many people. Yeah, exactly.
Man, you want $60 and you couldn't come?
The $60 was too small.
They're too small, dude. But you'd be surprised.
For 6, I don't know.
You'd be surprised. You'd be surprised. You ask someone for $100, and you tell them, "Hey, I need 100,000," and all of a sudden they come up with 100,000.
All right, look. So
Anyway.
this is a fair question
Tell me.
for everybody in the room, right? Because this is how we're gonna build.
Who was 200 grand?
It's not 200.
I'm
grand.
joking.
It's 20 grand a piece.
I was
for us.
kidding.
We need to know what we're going to do, right?
Mm.
That's what it comes down to. This is the time where we're at now. Like Mark's here, he says holding company and this and that. Before we could even get to that stage, because we're talking about investing, real investing, we need to know what we're going in with. Before we even get to that, though, you and I spoke about pooling resources.
Yeah.
Like if somebody doesn't have the 20 grand or the 10 grand or whatever, how can they get together? You know, like my mother used to run a partner back in the days, and it was like
Susu, eh?
it was $1,000 a week, and you know, 3 people that have the 1,000. She'd put those 2 together. You know what I mean? And
Yeah.
make up the $1,000.
Right.
So is that the same concept that we're going to work with? Right? Say Dave, myself, and Sean, we only have like I don't know 3 grand.
Partner hand.
Yes.
A partner hand,
So
yeah.
We put us together, then like explain that.
Yeah,
So
but
we
the way how I
understand.
see it, anyone that's here probably has the money to do it.
No.
You can't say that. You can't say that. You're not watching anyone's bank account.
I just
Right.
know that if someone doesn't,
Yeah.
he could probably come in with somebody, and they
Yeah.
could be a team, right?
Yes.
And you put that together. So let's say he said you only had 10. You only had 10, then you put together, and then,
Okay.
right? But you're not gonna get the same rate of return.
But the way I see it,
We get
is- the way I see it is okay if you do a holding company and said the holding company is 200,000. Whoever pulled, if I put in an extra 10 for you, well, I'm getting more shares.
Yes.
Yes,
Exactly.
Exactly.
With for a number of shares and dividends, so
Hey.
it's the same, it comes out to the same.
Yeah,
thing.
exactly.
Yeah. But that's the
Exactly.
holding company.
So-
That's a holding company side.
Yeah,
It's-
it's kind of us, you don't need to have 1/10 of it. You can have,
Yeah,
You just
so-
get less shares. You know
Yeah,
what I mean?
Yeah, exactly. And that's just accounting. If you're going to do that, then you need to know that, okay, at the end of the day, we need to have 200,000. Once you have 200,000, depending on how much you put into 200,000, that's your percentage.
Right.
okay.
Because like Dave makes a good point. He's right. I think most of us here have the bread.
Kid has it for sure.
I'm just gonna play the devil's advocate.
100%. 100%.
Alright, and
No, just ask good question. Man, I like the devil. Just
no, like the
just
devil,
ask good
alright.
questions.
No. What I'm gonna say is that basically, I'm going back to the scale thing again. Like you mentioned, $200,000, and like because he was saying like not everybody technically has 20,000 sitting down that they can just take and then move it and do this.
Right.
So based on the scale of it, if you can make 20% on 100,000, why couldn't you make the same 20% on 10,000 but with a smaller loss share? Because like the return is going to be on the same. It's just that the size
Yeah.
of the initial trade is going to be smaller, but the return, because you're tracking the same instrument,
Yes,
tracking the same
yes.
S&P and you, Nasdaq 100
Yes.
and the same gold,
Yes.
so the underlying doesn't change. So the return on the underlying still remains the same. So if I
Right.
have 10,000 versus 100,000
Yes,
or a million, the return
yes.
should be the same.
Yeah, but the more we
Yeah.
start with
Yeah,
and
yeah.
the more we trade, the more money
Because,
we're gonna make.
No.
yeah.
No, wait. Go ahead.
Well, the backup to that then, what determines the 20% straight through? Straight, but you're saying 20%?
Yes.
It's always, the market just gives you 20%, or the trading is 20% as a constant? Or it fluctuates, it could be 20, it could be 10, it could be different? Because if it's stabilized or set at 20%, like you said, whether it's 200,000 or 100,000, it's still 20%. Your percentage ratio is lower. But it's still 20%. What determines the 20%? Because that's the only percentage I've heard.
Right. So yes. So the 20% is basically a figure that we came up with that we figure we can reach, and even if we're short, with our other investments that we have in the back, we'll be able to make up the 20%. So the 20% is more like a guarantee that we're
That's if we
offering.
join them though, not if we start a new one.
But yeah, I understand. But is there a history based on the 20% that we can say?
Or
Well, the
guarantee.
history.
The history is like
A guarantee
Well,
on this
no,
money.
you
never
can't guarantee the
guaranteed.
market.
No, if it's-
But the history, is that, you know, we know over a period of time, this stock or
but
this
it could be
thing
more.
trades X amount and it stays. When it drops, it
It's
drops.
guaranteed.
But
no, we're guaranteeing 20%.
So you're guaranteeing.
Guaranteeing 20%.
Okay, thank
But
you.
that's like if we pull with your current company, right?
Correct.
That's
Correct.
because you already have the reserves
Correct.
to take care of fluctuations. Basically.
Correct.
Okay, okay.
Correct.
And that
But by
guarantee,
creating our own reserve, then we can guarantee our.
Sure. Exactly.
same
I'll
20%?
own,
Same 20%.
It doesn't matter the investment amount, it's 200,000?
If it's 200,000 and we're trading with 50,000, then you have enough reserves to cover a downturn in the market. And if you're calculating that the market's going to zero, You'll have enough. So when the market starts going down, you start to get, and if you don't close your contracts, you're eating into your margin. You're eating into, you have unrealized losses.
Yeah.
Okay? And that, as the market's going down, your losses are going higher and higher and higher. But you don't owe it yet until you get that call, which means that the first call comes when your capital that you put in is down to 50% of how much you owe.
Yeah.
Once it starts going below that, they start calling you saying you have 7 days to top up your account to get it above that amount, or you're at risk of them closing it automatically.
You're tapping out.
Exactly. At the end of the day, what we don't want is have to close those open contracts.
Yeah.
We want to be able to weather the storm.
Well, yeah, once you close it, you lose.
You lose. Those unrealized losses are actual losses. You actually have to pay that money. So at the end of the day, it's enough reserves. So if the market's going down, as you get that call, no problem. You put the cash in to bring your equity in your account back above the 50% mark.
So that's safety net.
Safety net, 100%.
That safety net, is it based on the 200,000 only, or is that safety net where you
It's
get a
based-
call,
uh-huh.
could it be based on a lower initial investment, like 100,000?
It could be based on a lower initial investment, exactly. So basically, like I said, there's an easy Excel sheet. You plug in the numbers, 50,000, and it tells you how much you need to have in reserves if the market actually went down to zero.
And that's still a guarantee from you guys.
And that's still a guarantee
But that's
from
like
us.
if you trading 50,000 though.
Yes,
But let's say if you're trading, let's say 25,000,
yes,
then you need only 75,000 in reserve.
correct,
If you're
correct.
trading 10,000, then you only need 40,000 or 30,000 in reserve.
I'm giving you example.
Yeah.
If we have an actual figure, we put it in, we find the actual number.
Okay.
It's
Yeah.
working like that. You understand
No,
what I'm
because
saying?
I'm
Okay.
just thinking out loud, like
Right.
for the group, like what would be like because like the whole
Sustainable
point,
number.
a sustainable number that'll also not be like a block for
Yeah.
momentum,
Mhm.
because we're all here because we're ready, right?
Mm-hmm.
So not so that somebody feels like, oh, I can't participate,
Mhm.
right? So
Mm-hmm.
if instead of starting with say 200,000,
Mhm.
if we started with less,
So then
so then we can still go forward,
Mhm.
and then we have something. Because once we have the momentum, it's easier for money to come in.
So that brings
Sure.
me back to the question you asked originally, which is 20% is still 20%. Based on,
Exactly. That's the whole thing I
so
was
in other
talking
words, you don't
about.
want people to get hype on the 20%. You want
Yeah.
you want people to think about an attainable, sustainable number that we can all go in it with
Yeah.
and feel
Mhm.
comfortable, right?
But your suggestion was,
To plug in the numbers to
20.
say that,
Yeah, I mean, my suggestion
like if there's
towards.
10 of us, you suggest we start like with what? Well,
I-
that's your suggestion. It's not
I-
long.
I-
1 million.
what
I'm gonna need a loan to pay it.
I think what I understood what you said.
Uh,
Whatever the number is,
Yes,
it's 100,000.
yes,
You put it in, it will tell you what your margins are, what your
Yes.
safety net is,
yes,
and whether the 20% is there. But it's the safety net we're looking at, that when it's a call, you pay so you don't.
you don't
tap out.
don't tap out, exactly,
Right. So
100%.
By putting the numbers in, you can do mock-up. I mean, you don't want to work too much.
Exactly,
You can
exactly.
do 100,000, 200,000.
Sure,
different
sure.
Figures.
If that's what you want to mock up for, that I can
You
do.
can say, well, hey, 100,000 means X amount of dollars each.
Yep.
And so on and so on and so forth. And then we see where we're comfortable as a starting point.
Sure,
And if you start at 100,000, for example, what it might be,
yeah,
of course, that can go up.
go up
That's what
for
I want
sure.
us to establish today, actually. I want us to leave here knowing the number that we're comfortable with. I don't see why we have to
also
switch it
leave
another
here
day.
knowing how many people are gonna be investing, because sometimes there's people that are here.
I think there's gonna be 10.
Okay.
I think everybody in this room accounts
Mm-hmm.
for, the only other person is probably Herbie.
Ruben.
Yeah, Rube, actually there's a few. There's,
There you go, that's what I said.
yeah, but at the end of the day, the reason why we have to come up with a number, because like Jeffrey said, we'll know who we have to supplement for, or who might not want to do it at the end based on the number. we
Yeah,
have.
yeah.
You know what I mean? We have to know these things.
But the
today.
people you're
This is
talking
what's gonna
about,
bring
been
us
here
forward.
already?
Yeah, Ruben, who's not here, you're asking me about Ruben. Ruben's always early. You're never
The big
early.
guy.
Yes.
Okay,
You know
good.
what I mean? So Ruben's not here.
He's a 6 o'clock guy.
Yes, I know that for sure. Clarence, I know he's in for sure. He just hurt his back. That's the holding company guy for who doesn't know, right? Edward, who's in Ontario, right? Renovations guy. I know he's in for sure, right? And Herbie, he's the other older gentleman.
No,
that-
Herbie, yeah.
Yeah. He's going through some medical issues. Too.
And then the
Yeah,
people in this
not
room.
well.
And then the people
Pass me that water,
right here.
Thank you.
Right? I don't think I left anybody else. I think that's it.
pretty much it.
Because I remember when I discussed it with Robbie and Jared, I think there's 15.
15 total.
There's 15 in total that were pretty solid, you know. But I know after today, we're probably gonna have 10. No, I just
I believe
Being
you.
realistic, yeah.
yeah, being realistic. You know what I mean? Because
And Dax.
it's just and Dax. Dax is one of those
Yeah.
too, because you know he's present. You know what I mean? He prepares food or whatever. But like I said, when it comes down to finances and money,
You don't
what I
know
mean?
his finances.
This is not. That's what I'm saying.
Okay.
When it comes down to that, you know what I mean? Using options and speculating, you know what I mean? I'm thinking
Right, right.
that there might be 10 of us at the end, right? So that's why I said 20. 200. To me, that sounds, in my head, I know you're thinking, I know everybody here is thinking like 20 could work. You know?
Yeah, even the person who doesn't have it thinks 20 grand. Yeah,
Could work.
Yeah,
You know what I
yeah.
mean? But at the end of the day, the thing is, you're here, and Jeffrey made a good point. You know what I mean?
Yeah.
You're still in based on whatever. Somebody else will supplement that, and they'll just have more.
Mm-hmm.
You know?
Just have a smaller percentage.
Or then,
we
or
don't all
maybe
need.
conversations could
10%,
also have to
you
get
know?
even once profit starts to be made.
Absolutely.
Sure.
Yeah, we don't all need
Absolutely.
10%. You can have
No, but
you can have 3%.
You can say it's
Who cares?
call it a payment plan, well, you just,
Whatever
it's a
doesn't-
buyback.
Just
I just have a
exactly.
question.
Or,
That's, you know.
I just have a question, just from my understanding, from what I was assuming is that, this is, let me know if I'm wrong. We registered a holding company, right? And then I thought we were gonna decide what type of investments we were gonna be getting into. This is one, right? This is what we consider an
Oh, because
egg.
you missed the meeting. That's true.
I missed the meeting, just for me to understand.
Mm-hmm.
So this is considered one egg, or this is considered all of our eggs?
No.
No, this is just one
It's
egg.
an egg.
Well, this is what I'm saying, so should we not do this first? Find out how much investment we're all gonna be putting in, and you're coming up with numbers for something, we're going ahead of even getting the business started, so we need to know what structure we're going at, what direction we're going at, what investments we're putting into. I don't wanna jump ahead and say, yeah, I'm gonna give you 10,000, and we don't even have, I know nothing about the company, I know nothing about the partners. Follow what I'm saying?
Yep.
I'm just saying,
For sure?
Well,
I'd rather go backwards, I'd rather start slow
Yep.
than jump the gun. I'm not jumping no gun until I know,
What's-
let's get it started, who are the shareholders, what part, let's focus on that first before me giving my eggs.
well, that's
into
actually what we're
investments.
discussing. That's why we said
Okay,
there could be 15.
because I wasn't here, so maybe
Right,
that's
there,
why.
there could be 15, but I think at the end it just might be 10.
Okay,
After we leave here today, I think we might even know who the 10 are. But,
I get where you're coming from. That's where the clarification on how the holding company works and everything that we need more info, because when I was looking at it, I was like, okay, we start the company, but before we know how many shares each one is gonna get, we have to determine the projects, and then we get a price per share to know. But so, but the company couldn't be established before we know any projects, and then we decide how much
yeah,
the
we
shares
have to
cost.
know the
Because the
project.
company is gonna cost money to establish anyways, right?
So as long as you know.
Not much to register. It's
Yeah,
not
No.
much to
like
register.
about
$2,000. It's like
Yeah.
2
I
Gs.
think it would be less than that, but anyways, but yeah.
Yeah.
Yeah. for
Can't be 2
simple-
Gs. Must be less than that.
simple,
No,
like
it's gonna
five-
be.
No,
Yeah,
for like,
it's
yeah,
2
hire
Gs?
a lawyer to do the whole.
Oh, the lawyer part. Oh, okay. Yeah, the actual everything. Okay. Yeah, yeah.
But also, if I may, the term supplement, I don't really, not comfortable with that. Because if it's, let's say the number is 10 or 20, and one do not have the 10 or 20, have less, who's supplementing whom?
Whoever decides to.
What's your name again? What's-
Jeffrey.
Jeffrey said, well, if one has 5, and I can go now to 50, I'm not supplementing nobody. My shares is higher, right? Because
Yeah, yeah,
it's not a
yeah.
supplement.
Okay, not a not a supplement. No, it's not a supplement.
That's you, Keith.
You get it. You get.
Excuse
You're supplementing yourself.
No, the supplement means
Yeah.
that I'm
Sure.
sharing mine with someone else.
Right.
They put less,
Yeah.
but they get the same share as me.
No, 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 no.
So explain supplement.
No, no, not supplement's wrong word, I think.
Maybe it was the wrong word.
I think supplement's a wrong word. Yeah,
So
Yeah.
please change the word.
yeah. So no, you get your
Well, we take the whole pool of money.
Yes.
and you get
and
your
then we
shares,
divide it based on, you get the percentage of your contribution.
your contribution.
That's
Exactly.
right, yeah.
And if it's
Simple.
equal shares,
Yeah.
it's
No supplement.
That's it.
But I think
Sorry.
there should be
The-
kind of an option to say,
To buy back some shares?
like I understand his question is supplement. So I said, okay, I can put my 20, but I put 10 for you. But
Your
if you
friends.
want to buy back from me,
But that could be
That's
like
an
an
agreement.
internal.
Yeah, internal agreement.
Yeah, two parties.
Yeah, that's right. But
so that has to be pretty clear. So he can build. He makes money. Okay, I can give you a 2
Yeah,
grand to
here
bring
you go.
up my
Yeah,
thing.
that's
It's like I'm just getting
agreement.
back my money.
Yeah.
I'm
Don't get me
financing.
wrong, I'm okay with that, because
Yeah.
my vision too is, like with Guyana, where I'm from, I wanna go with, and do some investment in there, because I know within the next 4 or 5 years, whatever we invest in there, it's gonna give you more than 20% of potential. It's gonna like, and there's so many different types of products that we can invest in.
Right,
And
right.
it's fresh, but not for long. That's
Gotcha.
why I'm asking, where are we putting our eggs? What's the investment? We make from here, are we gonna take that and use it for other investments? Because, what are the rules if somebody wants to?
With that, one thing we spoke about, and maybe you missed that one too, is it's a choice. At the end of the day, we might have 10 investments. You don't have to be a part of all of them.
Oh,
That's true. That is true.
It'll be part of the holding, okay.
But if it's
that's
under
what
a
it
holding
is.
company,
No, but if
it
it's
gets
under a
tricky,
holding
though.
company,
Gets
then
That's where it
that's,
gets tricky.
Yeah,
yeah, because under a holding company, then how are you going to decide who is part of what investment, right? Like what I had in mind, like this is my vision. Tell me if you guys are, like, what I had in mind is like to keep momentum going, right? Like we could try to like put a number that some may reach or not reach, or we can try to make sure that we all build from the base up, and then as we build, okay, we see another project that, okay, you know what, can we contribute a little bit more as a holding company, so we can put in more capital to help us build to the next one. So to start the holding company,
Yeah.
my number in my head that I had was $2,500. Everybody puts in $2,500. We have at 10, we have $25,000. We have enough funds to pay for the holding company, right? And then now we have a base. Even with that, you can start building something. We can trade it. We don't have to trade 100,000 or 200,000. We can still trade like that amount. Exactly. That would kind of give us like that trust that you were talking about the very first meeting.
Get our
Because
feet
we
wet.
all don't know each other, right?
Get into
Give us
it.
that trust, and it's like, okay, you know what? Now we can build on this. We can put in more, but that also gives people a chance to that. Okay, you know what? I feel good. I feel like, okay, I'm gonna pull up money, and then on the next round of this is the reason why startups would do first round. Financing, second round, VC financing, third round. So they do the first round to get a certain amount of money to confirm the concept. Okay, this is gonna work. And then, okay, now we're confident. We can come back as, okay, this is how the numbers look like.
Yeah.
Now we're confident we can get a second round. And we can even get outside investors that we can give them a different tier of shares
Members.
to give us money.
Yes,
That way we can.
That sounds good.
So,
That was part of our plan.
You know?
Yeah.
so I,
For members
I
to
have
buy
a
in.
question though.
Yeah.
Are we all good with the fact that this might be like this, the first type of investment that we would be going into, or the first type of project
100%.
investment we would be
Yeah.
going into?
Yeah.
Like we're all
Yeah.
comfortable that.
Yeah, we're just trying to find the number that
It's
we should
just
all
the,
buy in.
it's not the amount,
Yeah.
I'm questioning without knowing, I need to know more. I don't,
Because you basically need proof of concept.
basically, yes, 'cause I wanna get, right now we're building the boat.
Yes, for sure.
We didn't even go in water yet. We're building the boat, and if things are going good, and let's say something down the road, there's something good, and you come up with an idea where we can make 35, 45% investment on it, okay, let's get together, how much you wanna put into this guy? Okay, we all put $2,000 into it. $3,000, you know what I'm saying? Boom, that's it. We have an investment going there, we have an, going there, and we're growing the company, but it's on choice. Or you would say, guys, let's just sit and wait and watch it grow. And profits, from the profits, we have a board meeting, and we take that profit, and we go into something else. This is my assumption.
Right.
Because I'm not here for the short term, I'm here for the long term.
Yeah,
Right.
that's all right.
Fair enough.
Okay, so my number, yours was 25?
Yes.
Mine was 10.
To get
That was,
started,
that was my number.
I think 20.
I seen 10, 10, and it was 100. I just like the round number of it. And I think we could work with that. That was my number. So I think we just have to like brainstorm it, and then we just have to come to a consensus.
Let's get it started.
I think
So you're
that
saying 10
the
each?
easiest,
You're saying it's gonna be, oh, yes, yeah, that's true, you said it would come down to 10 people.
Yeah.
I think the easiest is obviously going the route that you have up on the screen in the sense of the first thing to make money on.
That was kind of my question.
Yeah.
So you're saying we should join in with his guys?
No, I'm
Okay.
saying that we should.
the original thing, join in with his guys.
I'm not opposed to it.
Okay.
I'd rather do us versus, joining something that's already. But if that's the case, that's the case.
But again,
I
what
don't care
are
about
the benefits and the negatives of each?
Right.
You know what I mean?
But I'm saying that this is the easiest way to build trust and actually do something that is progressive in the sense of getting paid. And we haven't really done a big shark move yet.
How much do you suggest each person put in?
I like the 25. It's easy.
2,500?
Yeah.
And
You know
what's-
what I mean?
Get started, I guess, to get on the ground.
I'm a-
And everybody gets in.
Well, I have crazy ideas. Look, you know what's happening in Jamaica right now, right?
Yeah.
To rebuild.
Perfect time to
To
do some
rebuild.
company. No, not even to
Get it
rebuild.
out of rebuild.
Yeah.
We get our
Yeah.
investment company and say, here, we're donating $600, $1,000 to help something. Just get the name out there, and then when it's time to do investments out there, they're growing. Everybody's gonna invest, you know that.
Yep, 100%.
You gotta get it on the rebuild. man.
Sorry, but Trinidad, with all those warships there, their business is declining. Their main business is gas. So once the prices drop, am I wrong?
100%.
Forget that. Guyana's billionaires coming out of Guyana. I guarantee you that. Billionaires coming out of Guyana. It's already starting. Like China, Japan just invested $100 million. Anyways, but well, I'm just saying, if we can strategize as a holding company and we go after the right places and the right investments, we just gotta use our brains. That's one of the, you gotta go after investments that are starting from the bottom, that can skyrocket. I mean, you know what I'm saying?
I think that also
Yeah,
getting
yeah.
back to what you were saying with the financing as well, how many people and so on and so forth. I think it makes it easier for the core group to get involved and participate. Nobody supplementing nobody. Everybody on their own feet,
Same amount.
doing
The only
their
reason
own
why
thing.
it didn't say 2,500 because our return's gonna be smaller.
No, the return is not gonna be
No,
small.
It's not about the
No,
return.
you see, no.
The underlying
You're
is the
looking
same,
at
it doesn't
growing.
change.
But
It's not
like
going-
you're talking about, I'm talking about number-wise, you're talking about percentage-wise.
I'm talking percentage-wise.
No, but I'm talking about number.
Exactly.
And I said, that's what I said before.
I understand
Imagine
the
if we put in $1 million, imagine how much we're gonna get
Yeah,
back.
but you know-
I'm not saying we're going to.
Yeah, of
But
course.
Dave,
Why don't we
I
start
don't think
now
kids
next
good
week?
for that.
Dave,
No,
it's about
I'm not good for.
I can't hear you.
It's about participating. It's about creating this unity that we're trying to create. Now, obviously, if we put bigger numbers, we're going to get bigger
numbers.
results.
Yeah.
But that doesn't mean that we're going to get inevitably the end goal, which is to build something
From scratch.
from scratch that has a strong foundation, and I could be like, yo, Dave's got me, Solomon's got me, no matter what, I'm good with these guys, right? So even in retrospect to some people that I haven't seen, I saw him once,
He was working.
if that.
Yeah, should they be considered shareholders?
The only reason why I'm bringing that up is because you eventually have to choose who's going to be shareholders of the holding company. Shouldn't it be somebody who's been present, all of the...
Yeah, but that person is gonna understand that, you know.
But that's along with the equation of how much you're going to invest and so on and so forth. I want to make it obtainable for everybody that has been participating.
I think there's the two parts. Dave is looking at the 20% return.
Yes,
That's it.
yes.
What Mark is talking about is an investment portfolio. We're looking at different investment portfolios
Sure.
to get other markets to come in, so you're making more money. For your 20% to work well, you need to be compounding for it to be really maximizing. If you're going on 1 year, you're not making that much money. You just turn your money around.
That's just one egg.
But if you're able to get, like he wants to do, if you get into compounding, now you're talking money.
So you're saying we should
Dave.
put $2,500
But
in
he's not there, he's not there in compounding yet, Dave.
Yeah.
Well,
We're working on it.
I'm not-
We're working on it. We're working on it.
Working on it.
Yeah, yeah.
Just talk about-
By the end of this year, we should have a solid proposal.
What amount do you suggest then?
Yeah.
Well,
That's what it all comes down to.
That was-
We all have a number.
well, I would look at 5,000 each.
That's better.
That's better.
That's better. But I-
Somewhere in the middle.
No, but I think like you said 10. When he said, when
You know why?
we were talking about 20, I was like, all right, no problem.
But you know why? Because the numbers, more people can do them, more people can invest in them, therefore the numbers will grow. Because if you get less people at 50 or less people at 10, at 20, at 5,000, you might get more, so the body, the investment amount is much greater. And if you want to now be able to sell shares, it's easier. More people say, yeah, well, I see things happening in Jamaica. I see things happening in different places. You guys are a holding company. We trust, we believe. I want in.
Okay.
Because the idea is to have people coming in.
People are
I
still
prefer
buying
the
at a
5
lesser
over the
number.
25.
People are still buying at a lesser number.
No, but like one of the
Yeah.
things that I dealt with back when I was in the bank, like if you take a structure like Berkshire Hathaway, I give the same example to Robert. Like if you take Berkshire Hathaway, the original core, they have A shares. Then once they got everything going, they created B shares, B class shares. They
Yeah.
had different rights. Then they created C class shares and B class shares. So
That's
with
right.
the holding company, we can create different levels and tiers of shares
That's
right.
I agree
to
with
be
that.
able to like
Yes.
grow the holding company as a whole. But the original core that started it still have the A shares. So what like I think I'm on the page with Robert is that the barrier to entry to the holding company A shares, we have to make it affordable for everyone to be able to start that. Then as we prove the concept, because like Keaton is saying, we don't have the proof of concept for the compounding yet.
That's right.
So then as we proof of concept, okay, yeah, we're not going to be making millionaires tomorrow, but at least we can see the machine working on a smaller scale.
Okay.
Then we could start creating the different tiers to be able to grow it up. This is like, I was doing this for 6 years when I was in the branch with different style of companies, building trust companies and things like that. And I saw this is what they were doing. And they were growing because they create the core, it works, they can prove it. Then they start creating the different tiers around it to bring more people in, but with different rights. So the core has voting rights. Maybe the class B has certain rights that are not obviously the same as the core, and then C and D, and then
That's right.
you kind of like, you know.
Yep, I agree with all of that. That's
So
well
you
said.
agree with 2,500?
No, we spoke about that. No, I don't agree with 25.
Okay, just checking.
No, I gave my number.
He's back with his numbers.
No,
The numbers will come when the time is
no,
right.
but that's it. We are giving that number. I
What
just
else
gave
did
my
you have
number.
coming up
Baby
here?
steps.
No, that was it.
Jeffrey, what's the number?
That was it. I mean, we're talking about, I'll put something together for
Let's
the
hear everybody's
different amounts and how much you need to have in reserve. I'll put that together for next.
Because right now, I don't quite catch the concept of are you in here for the long term or short term? Because all depending on the age of every person.
That's a good point.
So if I'm looking in 15 years to the future, but you're looking into 5 years in the future, our number is going to be different. So I guess the company or our investment groups have to decide: are we?
Yeah,
what kind of
people are
strategy
making money.
looking at?
Why would you want to come out?
Well, let us see.
But it's more that like
You should be able to
there's different ages of people, right? So like you said, like,
Yes, yes.
like I could have a longer term vision than Keaton.
Yeah, so-
Don't call him out. Don't call him out.
Term in my language, term of investment.
Nah.
Not term of life. Never back to the expired.
I think we're making it more complicated than it has to be.
Make it simple.
But
You know?
it means for, like you said, if the money and we're paid out every year, so, to me, in my mind, I enjoy making the money. I don't really want to take it out. I want to see it grow. Whereas somebody say I want to take it out to do other things. So we have to see what.
That's where like the bylaws will come in with regards to the holding company, right?
That's right.
Like
It
what
has
we're
to
gonna
be
decide,
established.
right?
Yeah,
But
that's
I-
what the other guy was talking
Yeah,
about.
Clarence,
Yeah. I think that we're all kind of spitting the same language right now. What your point is very good though on you know, on your goals, if it's short term, long term. I think if you guys remember from the first meeting,
Yeah.
my goal is long term and big money, right? But in order to do so, keep in mind, going with your point, Cadell's, we've all had some type of trauma in our lives, mainly investing with our own. That starting small is a way to get the trust up, and keep in mind, a few years down the road, is where the big money moves are gonna happen. Today, what we're talking about right now, it's all very important, but it's more semantics than anything else. So Dave, like you were talking about the 20% and all of that, and the numbers being bigger, so we get bigger numbers, I agree with you.
Yeah.
But that is not, that's not something that I would say today would be my goal. My goal would be that, yes, it is that, yes, but for us to kick this thing off and to make it cohesive, I think this is nice and easy to get into, and we don't have to come out of pocket where it's hurting the bank. And at the same time, we're building a trust and a community amongst the
We still
money.
have to come to an agreement on a number. Mark? Sure.
We can all vote on it.
Do you
Sure.
have a suggestion, Mark?
Before you do that, can I put like a little disclaimer? Like I have been in the crypto game since it started. One of the mantras of crypto is that you put what you're willing to lose. Now, if you're asking people to put $20,000 that are willing to lose with people that they don't necessarily know or haven't built a lot of trust, like we still meet each other, we're beginning to build trust. I think that is one of the reasons why a lot of startups fail. Too big, too soon, and then basically.
Yeah, but the big is subjective.
No, I understand what you mean, but
Do you think
like,
that
I
2,500 is
think
too small?
Do I think it's too small?
For me, like 20,
I don't think it's-
25,000 is too small?
no, like he plays with big numbers. You know, so asking
But-
him is not
but-
objective.
No, whoa. Don't do that. No, don't do that.
And I don't
All
know. I still think, I agree with you.
I am-
still think 25 is like
I
low,
think it's-
but I
think
mean,
it's
if we agree upon it, fine, let's do it.
I am get in
That's
where
what
you
I'm trying to
where
get
you fit in.
people's
That's
numbers.
it. What you can afford to lose, that's where I get in.
No,
You understand?
I get all of that, but I'm just saying it's subjective, right? To each and everybody's own personal way of thinking, whether their finances are. So I'm just saying we have to come to a consensus on what the number is.
Yeah,
So I'm
but-
saying
Even as of
25
right now,
but I
some
mean-
of us can't put in more than others.
But I mean, as
We can do that
as
now, no?
an initial, we're just talking initial to get the company up and running. At 2,500 is, that's okay. I mean, that's
When we say 2,500,
But
that's
that's the
a
thing.
buy into the company, basically.
to buy into the
It's not
company.
it's not
Yeah,
our
like some people could put in
investment,
25,
it's
you want to
just
put
our
in 10,
buy-in.
you put in 10. You just
Okay,
have 4
no,
times
It
more.
can't work like that, though.
No,
Oh, you want it to be
No,
equal?
the way I see it, okay, you say you want 10 shareholders, right? To be the core of the business, right?
think so.
First of all, my opinion is the 10 shareholders shouldn't be silent people, first of all. So they come in and bust out their chest and speak their mind. I'd rather the people that are here. So whoever is gonna be deciding to be, has to attend 80% of the meetings. Mandatory, that's my opinion. My opinion.
What's your number?
Yeah, let him finish. Come on, Dave. Let him finish.
Now,
We're gonna run out of time.
I'll be quick. I would suggest 2,500 for the 10 to start the business.
Okay, so that's the
So
consensus.
let me finish, I'm not finished. we have, let's say we have a $10,000 scale within a year. So we started with $2,500 initial investment, right? And then let's say we do our board meeting, let's say 2 months down the road or 3 months down the road, then we put in the next 2,500,
That, I like that.
right?
On another investment.
And another investment. And then, let's say our goal is to top 10,000 each, but gradually.
That makes sense.
That way we have a portfolio that's proper, and we have whatever we decide on, whether it's real estate, whether it's investing in Guyana, which I want to, whether it's investing somewhere where we know that we just invest it and let it grow because they're rebuilding. That's my thoughts. I don't want to go and put 10,000 into one basket.
Yep.
Get started.
Yeah.
From somebody,
Are we gonna make
Sean,
money from Guyana?
we haven't heard from you, please.
Oh yeah.
Let's hear from somebody.
There's a lot of. I mean,
Let's hear from.
I know there's
We
a
haven't
lot
heard
of.
anything from- I wanna hear from
Sure, go ahead, Sean.
Sean, what do you have to say?
No, listen.
Very good point.
What do you?
What do you have to say?
Sports
Just
betting.
What do you have to say?
No, listen, I understand everything that everybody's saying, and everybody's making good points. I think the underlining thing is trust. One of the things, everybody, they want to put a smaller amount in because they have to trust. They want to see what that money turns into in 2 years, 3 years, or whatever, or 6 months, whatever. There has to be trust, right? For me personally, you know, with the business I'm in, because there's a lot of us, but it's quite lucrative as well, you know, and that's something we can discuss another time. But you know, and that's another basket we can discuss. But yeah, I think it's a good, definitely. But the number you're talking about, yeah, 5 G's is fine.
Okay.
5 G's is fine. I don't see.
So we have, I think, 2 5Gs, 3 2500s.
I didn't hear what.
But me and you are the high rollers in the room.
You can't base yourself on.
It's gonna help open.
No, but what would you say? It's just a number.
It isn't a. For me, the thing is, I'm not a good person for numbers. I'm the dude who took 55,000, thrown into market, and then started to learn. I'm crazy.
See, and I'm crazy like that.
But so for me, because we're looking at inclusion and then 10, I don't know. We have to just decide: is it 10 or more? How much are we here? 1, 2, 3, 4, 5. 6,
There's a
7,
couple
8,
people that
9,
are
10.
here.
And there's a couple of people are missing.
So are you calling it 15?
He says in the end there will be 10 serious
If
people
it was
that
at
are
that,
going to
if
drop
it-
the money.
if it was at that number. But if we're gonna do, I like that system about a first 25, a 25 a couple months. We're building up to that.
Building up, yeah.
And we have our money placed.
Can it work with that? Is what you're doing? Because what I see in there is after a year we see this. It seems like it's a whole year of investment. It doesn't seem like it's incremental over time. Is this incremental?
It is though.
I didn't hear Clement say that in his presentation. Is it
But
incremental
he's
over
not
time?
done yet.
But go ahead.
Because that one is like a payout on a yearly basis. So it builds and then it gets paid out, and then
Yes.
builds and then it gets paid out,
Yes.
and then interest. So it builds like, so your principal essentially, it's a simple straight interest.
Yeah,
But
simple straight.
compounding is basically where you keep it.
That's right.
And
Yeah.
then you build, like, so like the next month is building on the holding period. So your holding period is compounded over
Yeah.
5 years. That's where you have like 134.
Yeah.
Correct.
Okay, so,
Is that the
so
penny in
this-
the jar thing?
so if we just do
Compound
quick,
every day.
say
Quarterly.
quick math, we call it a 15, 15 people times 5,000. That's 75,000. That's a buy-in and a spot for you, but we buy into his group where we don't have to have that reserve fund, just as a first investment. So then it makes it affordable. We're backed by the equity that you have already, and it's a price where it is inclusive for everybody.
That's a guaranteed return.
And it's guaranteed.
So
Guaranteed.
5,000, it works if we're 15. Even if we're 10, it's still 50,000. It's still a buy-in spot. So 5,000 seems a sweet
Which is what he
mathematical number.
suggested anyways.
Which is what I suggested at 5,000. And that was
You
your.
suggested
That was
10.
your.
You said 20. You said 20. You said 20. You said 20. You said 20.
Nobody bid on it, so you brought it back to 5.
Can I modify what you just said?
Yeah. good.
Can I modify what Jeffrey said?
Yeah.
And then combine what he said with what Mark said?
Yeah.
Yes.
So if we take, going back again to 2,500,
Yeah.
and then, but we said we're gonna build it out to 10,000,
Yeah.
right? So the initial holding company said,
Quarterly.
the initial amount to start
To get in.
is 2,500.
Yeah.
We take that, instead of joining his company, we pull that money and then we
Just
trade it
into
separately.
yeah. Just
And
so-
then,
okay.
like, we decide, okay, within 6 months or whatever the time frame is, we pull another 2,500, and then we could at that time decide, you know what, we like what is going on over with the $25,000 with the 10 people, whatever. Let's now put it together. Now we have 50. We could increase the number of contracts, increase our reserves. And then after so many often, like we decide, okay, after this time frame, we put $2,500 again. Now we are like 7,500. So we're giving ourselves a longer term view, but at the same time, we are also building trust. Because then, as we're doing all of that, we're still looking at different investments, like what he said he's doing. We can start looking into that. We can look into Guyana. We can look into
bringing profit. So like I said, we're not only doing trading, we're also doing real estate, we're also doing other things.
They have a portfolio.
We have a
Is that correct?
portfolio. That's why we're comfortable at this point to guarantee 20% whether the market goes up or down. So if the market goes down, we're still on the hook for 20%.
One question that I have is that, like, let's say we do a $50,000, okay?
Yes.
Each one of us pull $5,000. Instead
Yes.
of us, we
Yes.
win 50. Is
Yes.
the whole 50 being traded? Or
No, the
is
whole
it
50 is not being traded.
Okay.
But you're still guaranteed 20%.
20% on 50.
On 50. Yes,
Not
sir.
on- okay.
Yes, sir. Yes, sir. Yes, sir.
No, but
That's what I'm saying. Should we do that, or should we make a company ourselves? In your
Going back,
opinion,
no,
doesn't mean we're gonna do it.
based on like what he said, in terms of clarifying, like, you know, like the investor mindset versus like plugging it into a system that is already established, that we can basically make that return, makes sense. And also maybe if we push it up to $5,000, then that also weeds out a portion as well.
I said that also, but if we had gone even higher, some people are gonna run for the hills. But it also shows that later on, listen, anyone that's doing, you need money to do this.
No, but
you know what I'm saying?
But at the same time, I'm also like on the other side with Mark's opinion that we need to build it up.
Yeah.
So like even if we say that,
We're not gonna build trust if we put something that's guaranteed, because no matter what, we're getting something. We're not taking a risk with it.
Just to let you guys know, when I first came to these meetings, I got so excited, my brain started to like go crazy, right? I've got a contact in the US, he deals with Fortune 500 companies. He's been asking me for years, when are you ready to invest in Guyana? We're gonna be able to get products we won't even be touching, because he'll be our middleman, he'll be our salesman. Okay? He's one of the biggest sales reps for Modelo. He is in charge of the Vegas Stadium. He supplies me alcohol. I'm just saying I got a lot of potential where we can, there'll be other ventures that we can worry about that guaranteed profits. But, you know, I mean, you know what I'm talking
Sure,
about.
100%,
So this is what I
100%.
talked about
That's what
later
I
on
said.
too.
Yeah, yeah.
15 at 5.
So let me just
50 buy-in,
add this.
25 for your. So I'm saying the money.
Let me just add this, right? Because this is important, right? That's 15 at 5, right? If we don't have the 15 at 5, other people here, not to use the word that you don't like, Keaton, but supplement can bring us, because what we want now, it seems like we want 75.
Yeah.
That's what we want.
That would be the answer that you're looking
75. We
for.
want 75,000.
75, okay, break it down by,
Whether it's 10, whether it's 15 of us,
by 10 of us, it's 7,500, right?
listen, whether it's 5
yeah,
of us,
but he
you know what I
thinks-
mean?
he thinks it's gonna
The
be
number that
15.
we want is 75,000. That's the number that we need to work with.
Shouldn't
Right?
that be, shouldn't that be decided after we get the holding company going and then we bring the?
No,
We're gonna get there because the holding company is like a done deal.
yeah.
To me, that's semantics right now.
Yeah.
We're gonna get there. We need to establish this. Because like I said, I'm
Because he
tired
has
of
to make the
treading.
message in the group, right? So
Yes,
that's-
Yeah.
so-
tired of treading
So I guess
water.
that is
How many of these meetings are
in
we
the
gonna have?
statement.
You understand what I
We
mean?
need
I don't wanna tread
75.
water. We know we need 75 now. That's what we have to leave here with. Are we going with that model, which is part of that group, right? So that means that disqualifies the 2,500, which we're doing individualistically. We're not gonna do that, right? It's either or either. We can't do both. So we have to come to the point and a consensus that we agree with that model, right? So that's the food for thought.
But is it 75 from the all the A shares, or you 75, like if we just come up with 50, and then we get the 25 from the B shares?
That is
Again,
also possible.
That's possible.
I get, yes, because we know we need 75.
Okay.
That's what it comes down
So
to. That's
this
the
is-
number we're working with.
This is what I think that like we could like putting everything all together like in my head.
Mhm.
Our initial buying with them is $50,000.
Mhm.
75,000 was an extrapolation
Mhm.
because he figured there's going to be 15 of us
Mhm.
at
Mhm.
5,000.
Mhm.
And basically, there's a 25 always in the holding company for
For
day-to-day
rolling.
and in case there's other investments.
Okay.
It was
So based on the 15 number that you're talking about, based on the count that we are in this room, plus the other 2 or 3, like Clarence, Edward, and Ruben. I know Ruben for sure because he was here every single day waiting for us to just kind of like.
To get here.
The 6 o'clock. So,
Speaking for him, I know he's tired of treading water.
Yeah,
He's like,
just counting.
what's going on? What are
Just
we doing?
counting,
Yeah.
right? Just counting. That's 13 of us. So
Mhm.
let's say if we say $5,000.
Mhm.
At 13, we're not gonna get to 75,000, but
Mhm.
we can still get 50,000 buying with them. We'll still have enough money in the holding company to be able to register the holding company.
We can still get to 75. Somebody would just have to.
At
put
the end
more.
of the day, like I
But
said,
that's the
We're all putting
for
in
the
equal
most
amount,
part,
To
if we're
start,
at
I don't
13,
think we should do that. That will create problems.
It should be equal
But-
shares.
But that's what they were talking about from the beginning.
Equal shares to start the
Why?
company.
Yeah, why?
Why?
I said this already, and you guys said this.
So like, let's say for
Because
instance,
listen, what if all of a sudden everybody just has $1,000?
no, but like, let me give you another outrageous example.
Okay.
Let's say, for instance, we say we need 75,000 to buy in,
Mhm.
and then all of a sudden I'm like, oh, you know what? I know a couple people I can pull for myself
Mhm.
and bring 50,000.
Mhm.
So then I buy up 50% of the shares.
Mhm.
So then any decision we're gonna make, I get to veto because I'm gonna have 50% of the power.
You wait. Wait.
No, I'm saying, but just.
No, but I think the whole premise of this group was so we come together as a whole, that everybody, there's no leader. You remember the first meeting?
Yeah.
Yeah.
That we all make decisions together. So we shouldn't allow in the A shares for anyone to have more shares than others.
Exactly, but that's why in the beginning, for the first round, it should be equal.
Yes.
To get to whatever. If it's 75, we get to 73. Okay, it's 73, but it's equally shared
Equal share.
Exactly.
between
What's
the.
discussion about?
And then everybody has a vote, and then however the votes lie after that, then that's
Let's
it.
make it a round number.
And I think
Figure
what
out
you
the
just said
amounts.
that whatever we discuss, and then at the end of the day, we should vote on it to put it into action. So that way, the general consensus, 3/4 of everybody's voting green, we're going green.
Yeah.
If the percentage doesn't, or the votes don't work, we don't have a plan of action. So I think that's important too, to keep everybody on the same playing field and working together and working forward, because it's always good if I don't I don't agree with you, we have a disagreement, that we talk it out and you explain to me your point, so then eventually I'm like, yeah, that makes sense. So we vote on it, and I'm like, okay, I'm gonna vote with what Dave said, because at the end of the day, he closed me, you know, and I hear what he's saying, and I believe that. So at the end of the day, for tonight, because we're getting close to that time,
As usual.
we need to vote,
Yeah, I think we need to.
and we should marinate tonight and vote in what's up tomorrow.
No, I
Well,
think we can vote tonight.
I will just say this.
I think we have
Okay.
enough of us here to vote.
We do. I would just say this. We need a model. You know what I mean? We just need a model.
Yeah.
Again, Jeffrey presented a model.
Yes.
Right?
Yes.
And I like that number 75. And I like the reason why we presented that we needed 75.
Yeah.
So for me, even if there's 8 of us, I just see us still needing to get to 75.
Okay.
But
Because
That's good.
you'd have to
That's with the
present-
understanding.
Yeah,
that
'cause you'd have to
50
present
goes
it-
there,
yes.
with 25.
Right.
If we decide to do anything else,
Right.
we have to put more.
So there have to be models to vote on then. That's one model. You'd have to show me another
But-
model that's viable.
That model also is biased that we're capping the number. Like you said, you want to include, make sure that these 19 people are given basically one last, hey, we're ready to proceed before we go on into.
So then I don't think we can make a decision.
And it's
if we're
equal
gonna do
buying
that.
shares.
I'm not,
And your
I'm
model
not.
is equal buying shares. Like I said, I said 5,000.
The only problem is, the other 9 people
Mine
that
is
are
not
here,
I'm like, we need to
Like-
establish the model.
They
They
didn't
didn't have an opportunity to define the model that's established between.
because
us.
this is the thing, Robbie had a good point.
That's
The other
where
9
I'm at.
people,
Yeah,
see what I'm
yeah,
saying?
yeah,
They're not
yeah.
here, they're not getting the information. You're
Right,
just
because
dumping the
they're not
group.
here.
Hey, it's $5,000 to join, they don't know what it's for, like,
This is what
how
I'm
you gonna
saying.
explain that?
We're establishing that now. So even if it's
Chris,
6, 7, 8, 9, 10 of us, that number still has to be 75,000
Yeah.
because the model works. Present to me another model, a plan B of action then.
Plan B of action.
Yes, what is the other
An
model?
alternative.
An alternative model to
But
that.
But
what
that's what I said. The
Mhm.
buy-in.
Mhm.
So we have enough to buy in, which is 50,000,
Right.
right?
at what number, what dollar?
75.
That's still at 5.
That's 75, no?
No, not 75.
No,
That's
not
5,000.
Yeah,
At 5,000,
Okay.
we will still be able to buy in,
right.
right?
Yeah.
Now, like let's say for instance, with regards to the actual holding company,
Yes.
papagas that we have to do to create that legal entity.
Mm-hmm.
Once we have bought in, we're like, okay, it's $5,000 per person. There's 10 of us, 50,000. That is our investment. Now the rest of the other costs, in terms of like, just like we did with the food,
Yes.
in terms of like the cost of the actual legal structure,
$2,000.
he comes and says, okay, it's $2,345.
Divided by
We
10.
divide it by 10. Each one of you, this is your bill.
Put it into the account.
Structure is done.
So it's
So then
7,000.
we have a model that is working. We already have a buying. Something is being generated. Then we continue
Is there a
discussion.
guarantee with that too?
Yeah, it's 50,000.
For 50,000, yeah, yeah. Yeah, 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 yeah.
Right. So then we already have an investment going. We're going to have the legal structure. We'll pay for the legal structure once we have a bill, and then we divide the bill equally, and that's how we start.
Okay.
And the
And that
amount,
was two. That's,
the
that's, so
amount-
that's Jeffrey A and Solomon B.
the amount
Those are two
doesn't-
options right there.
the amount is guaranteed because we're rolling with Clement.
Yeah, but you do realize that the amount is not that much, that you're gonna get back
Right,
after a year.
but I'm just saying,
You're gonna
we're talking
$1,000.
about-
We're talking about billing something though.
Right.
No, okay, I get it.
Yeah.
There's gonna be other investments. Too.
Yeah, yeah, yeah.
Just gotta get the money and stay home.
There's gonna be other investments.
There better be.
There's a guarantee because we're gonna go with what's already working. So at the end of the day, 75, 50, it doesn't really make a difference except what's gonna show in the balance sheet, which we already are not expecting it to be what's up there right now because we're not starting at that amount. But that's okay because like I said, we're starting to the slow lane, we're gonna get to the fast lane, and this is an easy way to do that and get there.
I'm just making sure that everybody
have the
understands,
guarantee-
with a
we have the
$50,000
guarantee-
investment, 10 people, that's $1,000 each a year.
Dave, hold for a second. We have the guarantee at $50,000. Is that right, Clement?
Sorry, I was listening to the side conversation. Sorry,
I know.
go ahead. Sorry.
Clement,
Yes, go ahead. Sorry.
please help me out.
Yes, go ahead.
$50,000 with you.
Yes,
It's a buy-in.
yes,
It's a guarantee. Is that right?
yes,
Thank you.
yes,
That's all it is.
yes.
But Dave, you're saying $1,000 a year is because you're looking short term. We're looking at it a long term. So that you're not getting $1,000 a year because you're not going to get that money.
It's gonna sit there.
It's going to sit there and it's going to grow whilst we're building other avenues because the whole point is that we're getting together to create generational wealth.
Exactly.
Right? So we're not here to get a quick $1,000. If I want a quick $1,000, I can do a mortgage renewal. I'll get that.
All we gotta do is make
But
sure.
you know what I mean?
He wants a
Like,
happy ending at the end.
You just make sure Dave has a strong. He has to-
Dave.
Well, you know,
Everybody realizes.
Yes, it's long. Like I said, at the end of the day, I want to create something lasting, something, a legacy,
this is how we.
Let's do it. You guys
This
tell me
is
what
how
amount
we,
you wanna put in.
We start that trust wheel, man, like you're saying, with regards to his reserve that he was talking about, he was considering 15 people, but I also believe it's probably going to be 10. So, being realistic, 5,000, we will pull that number together, and then now we have an investment.
Yes.
And then we're forming the holding company in tandem. So at the same
It's a separate
time,
cost.
with the cost, we divvy up
Okay.
among ourselves, and then we
Yeah,
just
but-
leave that
There
go.
you go.
The money's coming through our
So I
holding
got the
company.
5,000?
Once it's
Exactly.
established.
Yeah, yeah, of course, yeah.
So right now it's a pledge. Right now it's a pledge. I pledge to like, you know, whatever, $5,000. And then we
Yeah,
have
let's
to
get the
holding
holding company
We
going.
keep going ahead of ourselves again.
Yeah, let's get the holding company going.
Get the holding company
Let's
going,
get-
get the money going.
I kind of see that both can be worked hand in hand. You know, you get the company going, and now you have something to work the company with.
No, I'm not gonna give the 50,000
No.
for the whole company.
No, the holding, has to go to the holding company. No, no.
No, because we're making the checkouts to the.
To the holding company.
We could do both. We could invest in his thing and start something of our own. We could do both.
Come on now.
We don't all have to do it. Clement, me and you need to talk.
No worries, man.
Both, but hold on, both viable options are on the table.
Yeah.
Because, again, we're gonna use that to establish the 10 people.
Yeah.
That's why we need the two viable options. It's not necessarily because of who's not here. It's really because of who is here today.
But again, you're in your 10, you're still, I look at it as
I
12, 13.
think, but that's the thing. I think the
because
10
with
we
the
already
other-
here.
Because look, there's 3, 6, 7.
There's 10 of us.
10. And
There's 10, but what about the core people that are not here today? Like, is Ruben?
That's why I said, put it in for next week. Put it in for next week. This is a story. We're making decisions. You need to be here. A players, B players, C players. If you're not here, no problem. You'll be a B player, C player. That's
Some members
it.
here- Some
it's
shareholders
working
are
on
not
that
members
level.
anyways.
No, I understand.
But I'm not making an excuse for it. I'm just saying,
but
if that happens to me, I'm an actor. If I end up in Toronto for a month, what happens? I can't come for meetings.
It doesn't happen. Even if it's 13 people at 5, it doesn't matter.
Yeah, that doesn't matter.
Be in reserve.
Yeah, it could be in reserve. Yeah.
We're gonna
Okay,
have
so here we all do know that you
You're
guys
saying
are
the rest of
Yeah.
the next couple,
So if it's 13, it's 13.
It's 13.
That 5.
Like we'll have our reserve
We'll make sure.
for what?
Adjourn. Adjourn.
So, but at the end of the day, like I said,
Thank you, sir.
we're all comfortable with this being the move.
Before we all leave, do we at least pledge